Welcome to Proven and Probable. I'm Maurice Jackson, and today we are going to discuss everything you need to know about uranium. Joining us for a conversation is Mr. David Talbot, Managing Director, Head of Equity Research at Red Cloud Securities, with a continued focus on uranium, precious, and battery metals. Mr. Talbot, thank you for joining us today, sir.
Well, thank you very much, Maurice. It's great to be here.
Well, it's a pleasure to speak with you today, as a number of our audience members are very keen on the value proposition of uranium. Along with other commodities, you've been covering uranium for a very long time. Sir, for someone new to the uranium proposition, in your view, what is the attractiveness of the uranium-fueled nuclear energy sector, and how much of Canada and the United States is powered by nuclear?
Great. Well, thank you for the questions, Maurice, and I appreciate the invite to your show. I've had about 10 years in the gold exploration industry, followed by 4 years covering gold stocks in the capital markets industry, but really my mainstay has been uranium since about 2007. And I've been to about 100 project sites, 120 project sites actually, in about 72 different countries at this point in my career, and still adding jurisdictions as well. So to get to your questions, I'd say just about 10% of all global electricity is generated by nuclear power. The U.S. is about 18.6% of its electricity from nuclear, and Canada is a little bit just under 14%. So the attractiveness of nuclear power, and we could be here all day, but really to keep it simple, no greenhouse gas emissions during operations. It helps mitigate the impact of climate change. It provides baseload power. Long life reactors are reliable and stable. Operating costs are relatively cheap. It provides energy security, and the fuel, essentially uranium availability is plentiful, yet not without its challenges.
Speaking of that attractiveness, is the demand for nuclear energy continuing to grow in North America and the rest of the world?
Yeah, nuclear energy generating capacity is growing at roughly 3.6% compounded annually, at least according to the WNA. And that was really up from expectations of about, say 2.9% growth a few years ago. So definitely positive news emerged last September about, increasing growth. There is about 440 reactors in operation, about 62 under construction, 92 in various stages of planning, and a whopping 343 being proposed. Now, I'm not suggesting that all of those are coming down the road, but certainly a good chunk of them are. So, right now, I'd say reactors in operation need about 180 million pounds to operate, while mines are expected to produce 145 million pounds. And, I'd say the growth in nuclear power is really coming largely from China, India, Russia, and Turkey. And, let's maybe break it down a bit. China's got 56 reactors, 21 under construction, another 41 proposed, and its goal is to surpass the USA in the next decade, and I think it'll actually easily do that. India has about 23 reactors right now, 7 on the way in the short term. Russia plans to grow its fleet of 36 reactors by 4, and Turkey's building its first 4 units as well. So, when you talk about nuclear power growth in North America, we don't actually talk about it that much. Canada, it's got about 19 reactors, another 2 on the drawing board. U.S. is 94 reactors. Nothing planned or proposed right now in the U.S., but I would point out that over the past few years, in the USA and elsewhere, it's probably just as important to speak out about reactors that are not shutting down. Some of those reactors globally are reaching their 50, 60-year life of reactor. But over the past 15 years or so, let's say in the U.S. alone, 10 reactors shut down for various reasons, including end of useful life and economic reasons. But I think now reactors are being extended. The regulators are really getting on board. They're extending lives of reactors. So, this is demand that wasn't planned a few years ago. And considering that demand is already there, right? There's no real capex cost or delay times. I'd say that extending reactors is almost as important, if not as important, as building replacement reactors.
Oh, very intriguing. Speaking of growth, we've seen a number of uranium, we've seen the number, I should say, of the uranium spot price double over the past year, reaching highs not seen in the past decade. Now, many of the uranium explorers, developers, and producers have seen significant gains in their stock price and market capitalization over that same period. Question for you, sir. Is this a supply side issue or increasing demand, or is it just pure speculation?
Okay, so I think it's not just about the uranium price doubling over the past year, but spot prices are up fivefold since late 2016 when prices were down near about $18 a pound. And I do think there are a lot of factors at play here. Demand, we went over that a little bit. As I mentioned, nuclear capacity is increased, and because of that increase, we need more uranium. On the supply side, we did see some production go offline due to depletion, and some of those are pretty big mines. You're looking at Ranger in Australia, Kalmanak in Niger, for example. Others were closed for economic factors. Many of the mines in the U.S., for example, Kalkara in Malawi, Rabbit Lake, and even MacArthur for a time, and Langer Heinrich at least until recently. So certainly COVID also impacted production. Mines in Kazakhstan, this is the largest producing uranium country in the world, only running at about 80% of what their subsoil use agreements had originally planned. And it really takes a long time for discoveries to make it to production, and part of that's permitting. A study just came out this week, talked about the world average discovery to production time is about 23 years, with US and Canada being amongst the slowest to get in production. So keep that in mind. But, I'd say pricing is also partially due to security of supply concerns. Part of this is geopolitical and part speculative in nature. And then we also have to consider physical buying. Sprott Physical Uranium Trust now owns 95.5 million pounds. Most of that was bought prior to 2023, but I think we've seen about 3.5 million pounds here purchased this far this year, and most of that even since May, so the last 3 months or so. But buying's also not restricted to just Sprott or Yellowcake PLC. We've seen more uranium companies pick up uranium over the last several years. You look at NextGen and Denison, Uranium Energy, Uranium Royalty, to name a few that have uranium on their books. So, and then I'd say finally, we're also seeing higher spot prices being supported by higher term pricing. The UX spot price is considered currently at $84.50 a pound, while UX sees long-term prices closer to $79 a pound. So there isn't a lot of difference between those two prices, and thus utilities are more apt to actually go out and make purchases, mainly in the term market. So, we did see some weakness in the market since we saw 106 a pound in Q1. But I'd say uranium trading volumes are off this year. We've only seen about 54 million pounds traded this year, about 60% of that in the term market, 40% in the spot markets. Last year, much more spot volume. We saw probably almost 30 million pounds versus 22 million pounds this year, but certainly term purchases by nuclear utilities was much higher last year. Total volumes last year, almost 140 million pounds. I'd say 20% of that in the spot market. So, movements in the spot market, we are all guilty of watching closely the pricing in the spot market. Certainly doesn't represent the market as a whole. And I think that's why term pricing is so important for investors to watch as well. As we do see term prices rise, on all that nuclear utility buying last year in particular, particularly as many of the U.S. utilities, which represents about 21% of the entire market, they had to worry about future sources. So, let's watch long-term pricing as much as the spot.
You referenced geopolitics. We're in the midst of a redesign of the geopolitical landscape that is affecting supply chains throughout the world. We've seen the Prohibiting Russian Uranium Imports Act recently signed by the U.S. government, which bans uranium imports from Russia, a trade worth around $1 billion annually, as reported by Reuters. And there is more news out out of the U.S. this past week with the signing of the Advanced Act Bill, which looks to boost nuclear reactor deployment. How will this impact the nuclear fuel supply sentiment for the nuclear industry in North America?
Yeah, you mentioned geopolitical landscape, but I think this also falls under government policy as well. So, I think both of those are leading to higher uranium prices. So maybe let's start first with the Russian uranium import ban, at least in the import ban into the U.S. Certainly, there was some speculation involved with this late last year and into Q1. Uranium prices rose from about $65 in September to $92 by year end, and even up to 106, as we said, early in Q1, before really settling down here. It's been range bound for a while, about 80 to $86 a pound. I'd say the U.S. is importing about 40%, or correction, was importing about 40% of its uranium from Russia, Kazakhstan, and Uzbekistan. And, this was recognized in 2016, and a Section 232 review really looked into whether this was a national security risk. Certainly, the Department of Defense and Department of Energy and bipartisan committees during the Trump administration all thought so. So fast forward to late last year, and the import ban was proposed and signed earlier this year. So really, as of 2028, we will see no more importation of Russian uranium. Any nuclear utilities that need to import Russian material prior to that must really get authorization or essentially a waiver from the Department of Energy. I don't think the DOE is actually going to go against the policy of the federal government, it being a federal government agency. I have not heard of any waivers being requested, or definitely not any signed. So, I think this is about 12 to 15 million pounds of uranium that will probably have to come from friendly sources. The U.S., Canada, Australia, Niger, or Namibia are probably going to be those sources. So the Bipartisan Advanced Act, was also signed by Biden early in July, and this aims to boost U.S. nuclear energy. So the key points here: promoting U.S. nuclear leadership, advancement of new tech, and really supporting nuclear electricity generation. They're looking to reduce time and costs for the nuclear utilities, help streamline permitting, and offer financial rewards for achieving milestones, things like, let's say, nuclear waste upcycling, national security enhancement, and regulatory efficiency. So, you put both of the acts together, these are two acts that have been signed, and this should really help boost uranium production in the U.S. And, there are no handouts here for the uranium industry. I think that's positive. That's the way the industry likes it. But certainly a strong nuclear industry and the elimination of foreign subsidized uranium availability should help support the American uranium industry and help get it back off the ground, if you will. And just as important, I think it'll help boost the entire fuel cycle, the nuclear fuel sector, essentially. The U.S. really will need some more conversion and specifically more enrichment capacity as well.
Speaking of handouts, let's go to Kazakhstan, where last week it was reported an increase in the country's mineral extraction tax, already increased to 6% in 2023, will be increased again in 2025, when additional increases could amount up to 20% plus in taxes for producers. Could you comment on that, sir?
Yeah, Maurice, this is a little bit of a head scratcher. I don't think it was really anticipated by anyone in the industry, and I'm not sure if it makes sense, to begin with. So, mineral extraction taxes for uranium, like you said, were to rise to 9% next year. And now Kazakhstan plans to implement a tiered tax structure starting in 2026. So as production increases beyond certain thresholds, taxes will increase as well. So a mine producing less than, let's say, 1.3 million pounds a year will pay 4% in tax, while the production over 10.4 million pounds will see an 18% mineral extraction tax. So, as uranium prices increase, we should also see taxes increase from nil below $70 a pound to, let's say, 2.5% over $110 a pound. So, I think that tax makes sense. It makes sense that if prices go up, you tax a little bit more. We've seen it elsewhere in the world. There is a tiered structure in Saskatchewan as well. But really, taxing the size of a mine, all I see this doing is discouraging companies from investing in their operations and increasing production. So they would choose not to. So that one makes a little bit less sense to me.
Now, just to summarize, we have the world's largest producer of uranium, implementing a dramatic increase in production taxes. Then we have the Russian ban on imports in the U.S. and the Advanced Act bill boosting nuclear reactor deployment in the U.S. Are these events built into the current price of uranium, and what impact do you see on the North American producers, developers, and explorers?
Yeah, so Maurice, I do believe the U.S. Advance Act had been partially built into pricing. And, time will tell. I think it'll take some time for this equate into new nuclear reactors, certainly, but hopefully more enrichment comes sooner than later. And both of those should really support a trickle down into the uranium sector as well. Certainly, the ban on Russian uranium has already had an impact on pricing. It might take some time as well, too, but the U.S. does have the availability to produce, I'd say, maybe 10 to 12 million pounds of uranium in the midterm, which almost makes up for most of that lost uranium supply. Existing producers, current startups or restarters, they'll have an immediate benefit of having some captive demand there. Uranium, nuclear utilities that need to find domestic content. And I think higher uranium prices across the board should really provide incentive for developers to move projects forward, and for provide the means for explorers to raise capital here and sink it into the ground. We're looking for more discoveries. So I do think this recent uranium rally certainly has seen more explorers move into areas that even in the last cycle we hadn't really seen much movement, much exploration. And again, we're seeing more and more companies emerge. I think there's probably 2 or 3 uranium companies a week at least that are brand new that I've never heard of before, even though I've been around for almost 20 years doing this. So I think it is good and bad. This might there might be a set amount of funding available for explorers, and certainly it'll have to be split amongst more companies. But I think as that number goes up, we'll also see the chances of discovery increase because there are a larger number of projects underway as well.
All right, let's make this more germane to the individual investor. Today, we've learned that the uranium sector has seen exceptional growth over the past year, and we've learned the macro levers in play suggest continued growth. As an analyst, you've covered explorers, developers, and producers. There's been an increase in the explorer company options for investments. What should investors look for when investing?
Yeah, so I'm not going to get into specific companies here, but there are some, let's say, rules of thumb to follow, particularly when investing in early stage exploration projects. And, I'd say management team is always near the top. Experience and track records really matter. Often I look at for people that have had prior success, especially in the uranium sector. Though you look out there and, there's a very high proportion of uranium exploration company CEOs that have come out of Cameco, and I'd say many exploration teams have really cut their teeth at Cameco, Denison, Fission, NextGen, let's say, over the past decade or so. So I think this cycle, we're probably even better off than we were in previous cycles, given the fact that we've got better expertise out there. So, and that expertise is really going to lead to a feasible exploration plan. These technical teams are the ones that come up with the geological theories, or geofantasy, as we often say, and it's like baseball. I think the best hitters, they go up to bat with a plan and they look for a specific pitch after years of prep work, and really the best exploration teams prepare and devise that plan. So, for example, I think everybody starts with mapping and sampling and geophysics, and, maybe their thought is, stop looking for Beaver Lodge deposits and start looking for basement hosted deposits, or maybe let's not use alkali leach, let's try acid leaching, or maybe we make sure the mine is underground and we put tailings back underground instead of doing an open pit. So I think those all are decisions that matter, and experience plays experience plays into that. So jurisdiction, this is important, obviously, and it's not just country or state or province, but also access to infrastructure, social license, how easy is it to permit, etc. Geological potential, this makes sense. I think mineral endowment may lend itself a little bit to jurisdiction as well. Are we looking in Saskatchewan or Utah or Wyoming? But more specifically, I think quality of project. Are there any historical exploration results? What are the similarities in this geological environment to existing deposit models? Look at the financial health of the company. All explorers need to raise funds, but is that going to be easy? So being out of money doesn't matter as much as is it easy for them to raise more money. And sometimes that leads into the next point is market conditions. This often dictates that financial health of the companies, the share price performance. Sometimes these are out of control of management teams, so maybe it's time to be frugal or selective on which projects are being developed. You look to different risk factors as well. Are there any social or environmental or regulatory or technical issues to be aware of? You look at uranium projects, is disequilibrium an issue? Is the gold mineralization nuggety or refractory, for example? So those are all things to consider. And then exit strategy. Can this company go it alone? Are they there to build a mine? Are they there to sell the company or the project or bring in a strategic partner? So, those are just a few things that I look at. It isn't a complete list. Every project is different. Every management team is different as well.
Well, great words of wisdom there, sir. Last question. What did I forget to ask?
So I think we talked a little bit about the upside of uranium prices and opportunity for uranium companies. We did talk about things to think about when investing for uranium exploration companies, but I don't think we really said much about the challenges of starting up a uranium mine. And I think this will have a direct impact on mine supply and supply expectations of investors. Some of these challenges are regulatory, let's say permitting, safety, environmental regulations. They need to be overcome. Social license certainly is required. You need to avoid environmental impacts. You need to make sure you've got a good reclamation plan in place. Community relations, I think, are paramount in this day and age, because really public perception and legal challenges might present themselves down the road, especially when we're talking about uranium in the U.S. Geopolitics certainly is another layer of complexity that we've got to deal with. Economic challenges, you include higher capital or operating costs, maybe uranium price expectations, time horizon of first production, those all matter. And technical challenges, include understanding and adapting to the uranium deposit itself, defining resources, how suitable mining methods and flow sheet decisions are. Plus, then you've got to implement and maintain the equipment needed to extract and process the uranium. And, as I really said up towards the top of the discussion, it takes years to get a project from discovery to production. So many of those jurisdictions we deem to be safe in Tier 1 are probably amongst the slowest to develop a project. But if you find a good project, I think you can move it along fairly quickly.
Mr. Talbot, for someone that wants to learn more about uranium and companies that you cover, please share your company's website address.
Yeah, absolutely. So, we work with, I'd say, 36, 37 uranium companies at Red Cloud Securities. That certainly doesn't include a couple dozen firms that I've covered since 2017, many of which are still active. So, if you want to go read up something, investors can really go to redcloudresearch.com and register for access to our research.
Mr. Talbot, it's been a pleasure speaking with you. Wishing you and your firm, Red Cloud Securities, the absolute best, sir.
Thank you, Maurice. It's been a pleasure.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.